Good morning. It's so good to see you. Thanks for allowing us to be a part of your day. And part of the day involves looking at how markets opened up today. We did that, about 18 minutes ago. Here we go. And the corn market's where we start, trying to break a two-day losing streak. We're a tick higher, 460 1/4, that on the December. Then over to the beans, and beans. We're 3 1/4 higher at 11.78, higher across the board, and probably got a little boost from that flash sale announcement to China earlier today. 4.5 million bushels. We had strong export sales in the new crop as well. Here's the rest of the complex, higher for soy meal and bean oil trying to move higher. Both of those have been lower over the last two sessions. Now, we were higher yesterday in the wheat market. We start with the front 2 months moving higher, half penny higher on September. It's 642 3/4. And this hard red is down 3/4 of a cent, 712 3/4. Cotton market. You know, we pushed up above 86 cents yesterday, and we've hit 86 already on both the May and July contracts. Those are deferred new crop contracts. The December is the front month there for new crop at 83.02. It's unchanged right now. All right, let's go to Dodge City. It's southwestern Kansas. Brady Huck, EmpowerAg Trading. By the way, Brady, I see the smile. Must mean there was maybe a little moisture coming through?
It's always great to wake up to a little bit of rain and some moisture, and I don't want to brag too much, but it's we had a nice little shower here in western Kansas, Dodge City. Don't know how broad spread it was, but always good to see some rain this time of year. So we've got weather turning a little more friendly across a lot of the corn and bean country, some risk premium coming out of the markets here recently, both war and weather. Corn and bean markets are testing the 50-day moving average and some key moving averages out there. A lot of this week's price action, I'm afraid, is pre-report positioning. Traders are awaiting the WASDE report next week, bracing for USDA's take on yield estimates, particularly in corn. Probably too early to make many adjustments to bean yields, but I wouldn't count out an adjustment there. And trades also thinking there might be some acreage adjustments next week in that WASDE report as well. So maybe there's some more corn acres coming into the mix. Old crop demand tweaks will also be looked at, and global supply adjustments. It's a big report next week, and it has a history of moving markets. We'll see what gets printed. A lot of times, though, the trade tries to guess what the USDA is going to do, and it's always unpredictable what they're going to print. We'll see where things line up, but you can have some whipsaw price action going into this report and coming out of the report. As soon as we get that report, though, we're going to go back right to trade and weather, war headlines, and demand signs of demand here too, Tony.
Okay, and I'm going to throw one more thing to keep an eye on. How important would you say are exports to our row crops here? So corn and beans, I'll throw sorghum in there as well.
Yeah, exports we always want to see those daily export flashes, Tony. We had that one from China here this morning. Keep them coming. Every time we get a daily export flash reported, those are strong signs of demand. And it takes two things to lead a market higher. It takes supply side supportive fundamentals and demand side supportive fundamentals. So seeing those export flashes each day and strong exports throughout the week, throughout the year, those are signs that we want to see to keep a bull market chugging away.
And to tie all this together, you mentioned a little bit of moisture falling there in southwestern Kansas. The lack of moisture falling in Central America. This isn't the first time it's happened. It happened, like 3 or 4 years ago that we saw Panama in a drought. And so suddenly they're restricting traffic through the Panama Canal. We just picked up word that we've got some more restrictions now coming to the Panama Canal. That could also be another variable in our markets. All right, quick break here. When we come back, how about we talk livestock? I don't know if Brady wants to talk cattle or not, but we'll find out in a moment. This is Market Day Report. All right, let's dig in. It's the cattle market. We open up in the red. We've been higher the last 2 days, but look, just slight losses here. This is just a fraction right now. 233.77 August down 40. We're 95 cents lower on October at 228.52. Now the feeders have been lower or higher the last 2 sessions. Were lower this morning. Out of the gate, 352.65. That's down 67. 3/4 lower on the September at 347.50. Hogs, that's just been under pressure, and well, we're in mixed territory as we start the trade today. Brady Huck is with EmpowerAg Trading in Dodge City. Let's talk the beef side of this right now. We're starting to see the market move higher, not just the futures market, but cash.
Right, yes. Cattle markets have been a lot more fun to talk about over the past week versus the month of July. July was nasty in cattle. Nice rally off the lows here recently. We've reclaimed some key moving averages. Set feeders and October fats have reclaimed the 200-day moving average. We'll see if they can hold that this week. Good level to hold on the charts here. But box beef has seen a nice bounce. We're about $8 firmer from where we were last Thursday, bottoming out at 360 on the choice cutout. That rally supports the cattle market and ideas that packers will be more inclined to buy some inventory. Bigger picture, though, Tony, funds need to develop a want to buy and build a long position in this market. And there's been some bearish headwinds in our face. You know, concerns about consumer pushback on higher prices, poor packer margins as well, and the reopening of the Mexican border. We've digested many of those bearish headlines really well over the last few weeks. And much of that July weakness we saw can be just tied back to a lack of leverage and seasonal declines in the cutout that we typically see during the month of July. So I think we have to watch the cutout going forward. The rib primal has taken off and supported this nice bounce in the cutout. We have to watch the chuck in the round. We need some help from some other primals to get this cutout to climb higher going forward, and further strengthen that cutout could support ideas that this market may need to go a little bit higher.
Yeah, and the other thing we need to keep in mind is this really hot, dry weather we've seen across the southern high plains, where we've got so much of our beef on feed right now. So, Brady, we'll keep an eye on that. Any final thought there?
No, yeah, dryness, drought, and weather. We're entering that time frame, cow-calf country, where you're evaluating your pasture conditions. How dry is it out there? How much grass do you have? Do you need to go out there and preg check your cows, cull them, and bring some more to town? And like you highlighted in the Western Plains, some dryness and drought in those pastures. Keep an eye on that. Also, time where you may be thinking about weaning your calf crop a little bit early to alleviate some of that stress on your pastures and help keep those cows in good conditions. So a lot of things happening out there in the ranch.
Yeah. Great insight, Brady. I had a feeling you'd be willing to talk cattle there. Brady Huck with EmpowerAg Trading in Dodge City.